Hi friends, Simit here from InformedTrades.com. Today is Thursday, May 22nd, 2014. Time for our daily forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing orders that I have on in the market, all as part of the learning process, helping traders learn. Of course, if any of the information I'm presenting to you is unfamiliar, we have a whole bunch of information over at InformedTrades.com. Check it out, register as a member, ask questions, share your knowledge. We can all sort of learn together. Set up a practice account, share your trades. The idea is we can trade together, learn together. Okay, let's take a look at the charts. Okay. I have a number of trades on. One is the Aussie yen Aussie yen trade that got filled yesterday. We'll come back to that chart in a moment. First, let's take a look at the gold chart, which is how I like to start. And the reason I like to start with gold is that personally I've got a larger amount of my net wealth in gold as a long-term trade. I think it's going to go much higher. I think we'll set new all-time highs in gold, past the high of what was it, around 1920 that we reached in September of 2011, almost 3 years ago. Okay, so here we are on gold. Basically, same story that we've seen. We see, I'm starting to view this really, especially going from, you might argue here. What is this? April 24th. So pretty much the past month, we've been between 1280 and 1310. So we've been between this major support here and the 50 simple moving average. I'm viewing this as a accumulation pattern. We have a whole bunch of information on that on InformedTrades.com. Basically, what it looks like to me technically is buyers are gearing up. And once they're done accumulating, we're going to see a big price move higher. Now, it could be, the thing with these trading ranges, it could also be the opposite. It could be that sellers are slowly getting out, and once they're done, then you're going to see a big fall. So it's accumulation or distribution. As a bull, I'm more inclined to think that it's accumulation. Technically, the two major levels to watch are 1280 and I would say 1320 here. If we clear 1320, close at or above that level, we're going to be above the 50 and 200 exponential moving averages. That's going to get a lot of shorts to close out. That's going to trigger a lot of funds that'll start looking at, they only want to trade with momentum. They're looking at the 50 and 200 as momentum ideas to gauge momentum. Once we're above that, it's going to trigger their interest, and they might come in as well as get a lot of the shorts out. On the flip side, or same concept but inverted, is 1280 at support. Major support level here. So if we close below here, there isn't much to stop it from another move down to 1180. So that's gold. The same story that we've had basically for a month. Let's see how much longer it goes. The longer this trading range continues, the more interesting and volatile or powerful the breakout will be. Okay, now let's go to the forex pairs. Let's see. Let's start with Canada Swiss. So I have 5 trades on at the moment, and only one of them is at break even, and that is Canada Swiss. So this trade is working out. So far, so good on this. I took half off right here at this doji here. So I saw doji. It was at a resistance level here. I thought, let me take half off, move the stop to break even. So this trade has been fully de-risked. Just a matter of holding on for the profit target here. Now, because I have 4 trades that have not been de-risked, where my stop is not at break-even, thus if the trade hits my stop, I will lose money. That's the most I want to have. So I don't have room for additional trades on at the moment. If one of my trades gets stopped out, or if it clears that resistance level I'll be looking at where I move my stop to break-even, then I'll be able to entertain other ideas. So that's Canada Swiss. Now the rest of the trades I have, like I mentioned, are not de-risked. Let's take a look at those, and let's start with the ones I'm losing money on or have a floating loss. One is euro dollar. Now this definitely doesn't look too good. We came very, very close to hitting my stop yesterday. Basically within 2 pips here. You see, it actually kind of looks like, because this is a thick red line, it actually kind of looks like it hit my stop. But it didn't actually hit my stop. The position is still alive. It looks like it's going to hit it today. So this is things not looking good for me. It was a hammer at support, so that's okay. Something to consider for me here is price was between the 50 and 200 exponential moving averages. That was the one reason that made me hesitate and think, oh, maybe I shouldn't enter this trade. I still don't really regret it, but it is something to consider. Maybe I should only enter trades when price is above the 50. Okay, dollar or enter. If I'm going to go long, price should be above the 50. If I'm going to go short, it should be below it. Dollar Canada. This is also, I have the short dollar trades on. So euro dollar, speculating on the long side, that's just short dollar trade. And dollar Canada, speculating this will go down, that is also a short dollar Canada trade or a short dollar trade. Now that is almost at break even, basically at break even. But I like this. This price action is a little more favorable to me. I feel better about it. Let's see if price goes all the way back down. We do see this is a support level I entered at, or resistance level I entered at. And yesterday we came back and tested it, but it formed a doji off that, and today looks like another doji. So this still looks good to me, even though it's not in the money. I at least like the price action. I think the candlesticks are favorable. So those are the two trades I have on that are not really in the money. Everything else is looking pretty good. Let's take a look at pound yen. Okay, so pound yen now, let's see where we close today or maybe tomorrow. If we can close at or above this orange line, I will be able to move my stop to break even. So definitely looking forward to that if we can get there. And the other trade I have on is Aussie yen. So basically back in the yen position, the short yen positions, they are working out well for me. These are the main trades. Historically in my, it's been 9 years I've been trading live. And I've made money every year, so that's reassuring. Oh, except my first year, I think. I'm pretty sure except my first year. I've been positive every year. Some as low as 4%, as high as 20, or no, as high as 55%. So it's been a range of sorts. But the general theme is that in my time is that it's one or two trades a year that really make it for me. So now, and it took me a while to realize that's what was happening, but now that I have realized that, I'm starting to think of what are going to be those trades that can possibly give me a really good year. And short yen is still my favorite. I don't know if it's coming this year or next year, but we'll see. I'm definitely trying to look at the technicals and see when is going to, anytime it looks like the yen might be getting ready to weaken, I get my position in there. So yesterday, Aussie yen, hammer off support now again. We are below or between the 50 and 200 exponential moving average here. So that goes back to a similar situation on euro dollar, which didn't or is not working out for me. It's working out a little better on Aussie yen though. This position is in the money. It did touch resistance here. So the bears did step in and quickly push price down. You see this is a doji of sorts with really long wicks. We had the hammer off support, so we'll see. So far, so good on this. I am curious to see if being below the 50 simple moving average by this much is something I'll regret or something that works. But really, until we can, nothing much to do here until we can get at or above 94.32. Then I can move my stop to break even. As it notes here, I want to take partial profit at 96.20, right around there, and hold on for a much longer gain on the yen. The yen is the currency I want to short, and the goal, as I've said numerous times, is to have the largest position I can to ride the bulk of a short yen trade as safely as I can, and that is, of course, the key requirement to do this all with minimizing risk exposure and to do it safely. So that's the basic idea. InformedTrades.com/Japan. If you're wondering why I'm so bearish on the yen, we have a whole bunch of information there. InformedTrades.com/Japan. That's where I'm at the moment. To summarize, I'm at full risk exposure. No more trades going to be put on until I have some risk cleared up. That could happen in a couple ways. One, if my euro dollar position gets stopped out for a loss, that frees up some risk I can apply to other trades, as well as if pound yen, if I can close at or above break even, or at or above that resistance level, then I'll move my stop to break even, and I might be able to do that today or tomorrow. That's about it for trading today. Any questions you have, anything you want to add, join us at InformedTrades.com. I'm happy to answer any questions you have over there. That's about it. Best of luck in your trading, and we will see you tomorrow. Take care.